Everyone, welcome. We just got the closing bell for Friday, February 16th, closing out the week on it was a very active week, but ultimately, I don't think it really went anywhere. Let's confirm that. Let's take a look where we ended up today in our SPY. We traded very actively. We came down initially. We held this blue line support that we talked about in the morning video. We bounced right off of it and then traded higher, bouncing off of the VWAP, and then came right back down to the blue support line right at the end of the session over here. So ultimately, we did come down, but we did not come down beyond the significant. It's significant that we held right here. So how does that look on a day-to-day view? It just looks like we undid yesterday's gain. So basically that sideways movement, now we're at the EMA 8. And if we look at this on a 1-week basis, we're just barely down. If I switch this week view, I should see a pretty flat candle right there. Yep. So we did come down, touch this trend line, come back up, both on the weekly and on the daily charts. So basically sideways. We just ended up sideways, slightly down at the end of the week. So again, lots of volatility, lots of movement, but not a lot of progress. We didn't really change where we ended up. So we've been talking about for last week or so the possibility of sideways movement. This is definitely not confirmation of that, but we just happened to get sideways movement for this week. And from yesterday to today, we did come down and touch a trend line and bounce off of it, which is very significant. What we need to do now, though, is be able to trade above this all-time high right here that happened on Monday. So if we can get through there with some momentum, then we can get another leg of this trend going. Otherwise, we might just chop sideways and break this trend line sideways. It doesn't mean that we're going to fall. It just means that maybe we might just chop sideways through that trend line. So we'll have to see how next week develops. Next week, we do have some pretty significant earnings. I don't know what's on the economic calendar. Let's see if I can get something going over here where I can see that. Maybe trading economics. I don't really like Bloomberg's. Let's see next week. See if we can pick out anything real fast that might be significant. So they don't have anything listed. Oh, Monday is a holiday. That's why there's nothing listed for Monday. Monday is a market holiday. Both the stock market and bond markets will be closed. That means you will not see me, you will not hear from me for a pre and post market analysis because there will be no market. So enjoy your long weekend. So on Tuesday, we have a T-bill auction that shouldn't be too significant. We might see some reflection of that in the TLT, but T-bills are as short as they come, and I probably won't bleed into the longer term rates. Wednesday, nothing really significant is jumping out at me. Jobless claims have been kind of a nothing burger for at least a year, maybe two. Yeah, I'm not seeing anything significant next week. So our attention really should be on what does TLT do and then what types of earnings do we have coming out that week. So let's look at next week. Okay, and I'll sort this by market cap. NVIDIA, we already mentioned that this morning. That's going to be huge. Walmart is going to be one to look at in the kind of consumer staples and sort of retail space. Same with Home Depot. Is this Intuit? Yeah, this is Intuit. That's going to be big for tech, consumer discretionary for Booking.com, Palo Alto Networks, internet security. So that'll be pretty significant too. Medtronics, yeah, they're more very stable in the medical devices space. So I wouldn't expect too much from that. And then we have various other ones, but these are the major ones. NVIDIA is going to be huge. So we want to pay attention to that. We want to be very careful leading up to NVIDIA earnings. So that might be a good time. The day before earnings or 2 days before earnings might be a great time for a hedge, just in case, because NVIDIA does have the potential to really influence the markets, especially the QQQ. Same with Walmart. Walmart will have less of an effect, but it can still have a pretty big effect on the S&P 500. So those two I really watch out for. Home Depot, not quite as much as Walmart. Maybe these two combined, if they have a similar story, then that could really move the market. But really the one that we want to watch out for is NVIDIA. That's probably going to be our focus for next week. Let's see how the Fed Watch tool, if it updated from this morning when we talked about it. Let's look at that May number. We're looking at 35, 36. So it went up a tiny bit from this morning. So instead of going down towards 30, it just went to the mid 50s. But okay, 30 to 40%, like I said before, is a reasonable range. So we're not going to nitpick that. Let's see what TLT did. TLT held the MA90. We went up a little bit, so we gapped down to the MA90 and then went up a little, and it's looking almost exactly like these two bars right here, just sitting right on top of the MA90 and similar size. So TLT for now is not really giving us anything. It's just sideways movement. So if we see a directional movement in TLT, or if we see really significant earnings beats or earnings misses, or reactions from the earnings call on NVIDIA in particular, maybe a little bit on Walmart and Home Depot, then we could start to get some change in directionality in the market. For now, just very, very, very mild view that we could just be chopping sideways, but really we are in this trend, and as long as we can break above that previous high, we'll have no problem moving higher. So for now, same story. Nothing has changed. Today's session has changed nothing. We're still pointed upwards. We're still looking at net longs in our portfolios and then putting on hedges when it's appropriate. But we may start looking at some non-directional trades, some income type of trades, some spreads, some things that take advantage of a limited range of movement, at least up and down movement. Not, I should say, from a day-to-day perspective. The daily movement might still be significant. We might still get a very tall bar, but the ultimate range of close to close is limited. So start looking at trades that can take advantage of that, because we might be entering a choppy period. And if we don't enter a choppy period and we just keep on swinging up, well, as long as you don't do anything like a iron condor, or you're not selling calls like bear call spreads or bull put spreads, or buying bull put spreads, then you should be okay, because there is upside potential. We don't have a cap really on the upside, except for this psychological resistance 2 up here, but that's not real. Like there's no evidence of that particular resistance. It's just a common psychological resistance. There is evidence of a bottom support on this trend line and the EMA 20. So that this support is stronger than this resistance. So we are still pointed upwards. And if you do take any of those, at least theta neutral, close to theta neutral, meaning that time decay doesn't really figure in, or time decay works in your favor, then you want to have the unlimited potential to the upside and limited risk to downside, and not the other way around. Okay, so basically, if we fall a whole bunch, we don't want to. If we fall, then yeah, you might lose money if we break through the trend line, but you don't lose any money if we move up higher, because moving up higher is the less restricted direction. Okay? So let's look at our VIX. Our VIX went up, but not much. It's basically looks like the exact same bar as yesterday, except a different color. So really not that much. So I wouldn't put any significance in what happened to the VIX today. So basically everything we looked at today was just nothing burger. Nothing changed, nothing changed, nothing changed. We did have the options expiration today, which probably helped introduce some of this volatility, but ultimately nothing changed. No one's view changed. The market didn't change. The only thing that maybe I'll look at is sectors. And then I want to look at the number of stocks above and below their MA50 and MA200. So that will round out my picture. I'm not expecting to see anything different in the MA50, MA200, but if there is, then that is going to be something we want to pay attention to. So if we look at the market momentum, the entire market, not just the S&P 500, so any stock in the market that's above $2, we've got 56% above their 50 MA, 61%, 62% above their 200. That is 2% higher or 3% higher than earlier this week. So just a tiny bit higher. I wouldn't really put any significance in that. And then we'll take a look at the same thing in S&P 500. So there is more. This 60%, I think we were down at 55 or 56% earlier this week, and this was in the 60s. So overall, the S&P 500 number of stocks moving up, it has increased. So that is kind of supporting this continued upward trend. So, but at the longer term, we're still expecting this to retrace down to the 30 to 40 level. We're talking about the 1 to 2 month. But in the short term, this is supporting another half a week or week of upward movement. So as long as we can get above that cycle or the all-time high, if we can get above that all-time high, then we will see continued upward movement in the markets. Okay, I think, was there something else I was going to like? That was the VIX, the ATR. I think that was it. Okay, so overall, nothing's really changed. We're just going to expect this to keep on moving up along this line for another week or two. Maybe we'll pull back to the trend line, maybe we won't, or maybe we'll just chop sideways into the trend line, and then we'll see, does it bounce up or does it fall through? But for now, our expectation is that this trend line is still holding. And then if we get near the trend line, then we'll start evaluating whether the likelihood of it breaking through. But until then, we're pointed upwards, and then we have small baby hedges in to protect us for the non-normal event, like we talked about this morning. The normal event would be, hey, come back and touch this trend line, right? A non-normal event would be we move way beyond the trend line. A normal event would be we chop sideways. A normal event would be we continue moving upwards. A non-normal event would be we scream higher, right? We have this giant bar or we go parabolic. That would be non-normal. But of course, that non-normal would be in your favor if we are pointed in the upward direction. So we don't need protection for that. So the only non-normal case that we need to protect against is a drop down below this trend line right here, or you can use the EMA 20 because they're very similar levels. So now that you know the case that you're protecting for, you can choose an appropriate hedge and you can choose the appropriate amount of protection that you need or the proper cost that you're willing to bear for that protection. Okay, so have a wonderful long weekend, everyone. I will see you guys on Tuesday morning before the markets, and we'll see you then.